what happened to the US stock market last week. Wall Street was in the red on Friday on the back of global growth worries. The declines came after the latest Chinese growth data sparked concerns about the world's #2 economy, and negative reports related to some of the biggest US companies were unveiled. The S&P 500 index declined by 0.4% to end Friday's trading session at 2,986.20. The index still gained 1.64% for the week, as more than 70 S&P 500 companies reported calendar third-quarter earnings. Of those companies, 81% posted better than expected results. Meanwhile, the Dow Jones Industrial Average fell by 0.95% to close at 26,770. Friday's losses still did not prevent the 30 stock index from posting a 1% gain for the week. Meanwhile, the Nasdaq Composite was also in an uptrend as enthusiasm around US corporate earnings lifted market sentiment. Despite the fact that the tech-heavy index slid by 0.83% to 8,089 on Friday, it was still able to post a solid 1.7% gain for the week. Optimism around Brexit also gave stocks a boost last week. The UK and European Union struck a long-awaited draft Brexit deal. British and EU officials reached the agreement after successive days of talks and almost 3 years of tense discussions. In corporate news, negative news related to Boeing and Johnson & Johnson weighed on the market. Boeing shares plunged after the U.S. Federal Aviation Administration said that company instant messages suggest the aerospace giant misled regulators over the safety systems of the 737 MAX. Boeing stock fell by 6.8%, its biggest one-day drop since February 2016, to end the day at $344 and mark a 7.3% fall week-on-week. On the other hand, shares of the Coca-Cola were among gainers after the company announced its third-quarter results. The company's stock gained almost 2% on Friday and advanced by 2% on a weekly basis. The Coca-Cola posted earnings of 56 cents per share on $9.5 billion in revenue. It beat revenue expectations, but earnings were in line with estimates. Looking ahead to full year 2019, the company expects revenue growth of at least 5%, projecting the growth will be higher than expected. Further, it lowered its capital expenditure forecast to $2.2 billion. You've watched a weekly financial review on InstaTV with me, Anna Kasatkina. Stay tuned.